I've made over $2 million trading, and I want to start with the proof because everybody in this space talks and almost nobody shows. This right here is one of my public audited accounts where we have made a 317% return, just starting off with a $50,000 investment. I have also been trading live for the past 4 years every single day and have grown a community to 7,300 members where I share every single day my exact setups, my exact signals. After live trading this day trading strategy for years to thousands of people, this is what is changing how people trade the markets in real time. And in this video, I'm going to explain how to trade like a pro in 3 simple steps. And after, I will show you how to execute. So the first step to trade profitably is to have a strategy that works. You must learn a profitable strategy which you know is profitable and stick to it. For example, my strategy, you guys know it's profitable. I've just shared you the MyFX book with 2-year track record. I've been trading the same strategy for years. Therefore, you need to learn one strategy the same way I trade the STS snipe trading strategy. So I'm just gonna share with you for free one of my simplest entry models I use for my strategy. This entry model is the structure 50% supply or demand zone entry model. All right, this is one of the many entry models I use in my strategy, which like always, all of my entry models or all of my strategy consists of the same confluences. If you pay attention to my different entry models, they are all pretty much the same, just with very little variations, but the same core fundamentals. So firstly, you're gonna need a trading strategy. That's gonna be your first step to trade profitably, which is the structure 50% supply or demand within the STS snipe trading strategy. So to keep it very simple, we are going to identify structure. This is a BOS to the downside, so we are looking for sells. We are then going to identify on the latest impulsive move a supply zone, we are going to identify our 50% of FIB, which is right here, and then we're going to identify a supply zone within our 50% of FIB. In this case, it's a supply zone because we are on a bearish trend, so we want to trade sells. So this would be our supply zone where we're going to trade from. Okay, now that we already have a trading strategy that we know is profitable, that I have proven thousands of times that it's profitable, and that you have the audited results to check for yourself that it's profitable. Now we want to move on to the next thing you're going to need, which is risk management. As obvious as it sounds, risk management. As obvious as it sounds, a lot of you tend to avoid risk management or tend to forget about risk management when the market gets hit, when your trading gets hit, or when things don't work your way. So second step we're gonna need is risk management. Set one specific risk per trade and set a limit of daily losses. For me, it's very simple. I will take a maximum of 2 trades in a day for a maximum loss if I lose both trades of a 1.5% of my total trading balance. All right, so once you know this, then you are going to calculate your if you know your risk per trade is, let's say, 0.75%, let's round it up to a 1% to keep it simpler, and your trading balance is $100,000. You know you want to risk $1,000 per trade. Then you need to know how large is your stop loss on your trade. So let's say if we are gonna be trading this supply zone, we know my stop loss is, just to keep it very simple for this example, you know it's 110 pips, let's just make it 100 pips. You know my stop loss is 100 pips and I'm risking 1%, which is $1,000. This means I need to calculate my lot size, knowing that one lot equals $10 per pip on gold. So this means I'm going to be risking, this is a very, very simple calculation to make. So if one lot equals $10 per pip on gold and we are risking 100 pips, that means if we were risking one lot times 100 pips, that would be $10,000, which means if we want to risk $1,000 only, we know our risk on this setup, for example, is going to be 0.1 lots. If we wanted to trade this zone, we have 100 pips stop loss. If we want to risk a 1% of our account and we have a $100,000 account, that means we want to risk $1,000, okay? Which means on gold, every pip on a standard lot pays $10. So every price movement on a standard lot position equals $10. So if we have 100 pips stop loss and we want to risk $1,000 only, we are going to trade one lot. This way we know already before entering the position what will be our maximum risk. It's already calculated. It's one lot, and if the stop loss hits, that will be a $1,000 loss, which will mean 1% of our account. So now that we already have a profitable entry model, that we know our risk per trade, we are just missing one key component, which is trade management, which is also a very important aspect to my trading, which is how I manage my positions. What do I do once I'm inside a trade? I have a very simple rule when it comes to managing my positions. And the way I personally manage my positions that has made me all of this money throughout these years, and I have been able to build such a track record, is by doing the following. And it is incredibly simple. And this is the last step. So at 1-to-1, we are going to be protecting our position, which means we are going to be moving our stop loss to break even. Then at 1-to-3, I'm going to close at 50% of my position, okay? Which this means this 50% at 1-to-3 will equal a 1.5% of my risk already, okay? And then I'm going to be closing another 40% at my ultimate target, all right? And then holding a 10% to run. So my trade management, very simple. On this exact same setup right here, this would be my entry. Okay, then at 1-to-1, when the risk to reward is 1-to-1, so would be right here. When it's at 1.0, right here. Here, I am not taking any partials. I am not doing anything. I am just moving my stop loss to break even. Okay, at this stage, I'm moving my stop loss to break even. Then once price gets to 1-to-3 risk to reward, which would be more or less somewhere here, I am closing 50% of my position, all right? And lastly, when price gets to the ultimate target, which in this setup would be this swing low over here, I will be closing another 40%, okay? And then by the time this ultimate target hits, I'm always going to be holding, so once the ultimate target hits, I will close 40% of my total position. So at this point I will be 90% out, and then because gold is gold and gold is a very trending asset, I am going to hold on 10% of my position for a long time, and I will just keep on taking partials of that position. And I do not mind if that 10% goes back to my break even, because I could have closed everything fully on the ultimate target, but sometimes that little 10% will turn into a monster position when trading gold, especially if you are trading in the right direction. If this guide helped you, and trust me, if you actually apply this, it will make you dangerously good at trading. Like the video, subscribe to the channel, and join the community. I will see you in the next one.